All right, guys, welcome back. So I try to point out the good trade ideas when I see them in the stock market. We're going to get into that. I'll point out a couple possible trade ideas, and we'll look at the general markets. I'm going to start it out right here with Tesla. Now, Tesla has been, I've been interested in shorting Tesla. I have been shorting Tesla. I shorted Tesla when we got the breakdown all the way up here. It consists with the same breakdown that we saw in the triple Qs. But that's when I got short. And so far, that's played out nicely. Now, I think there's a lot more opportunity, though, to the downside in Tesla. And I want to point out what I'm seeing here and where we're trading at right now. So I've got this trend line, this upward trend line. This is the upward trend line Tesla's been in since really the March lows. And it's not the cleanest trend line, but there's a couple reactions, so I can make the trend line. We've got a reaction down here, reaction right there, another one right there. And then we sliced through it just a little bit right here. It ended up being kind of a bear trap. Now what we have going on again is what they're making it look like a bear trap, and it could be. But the way I'm going to play this, and I've got it marked out, let me show you here on my trading platform. So I've marked out these couple levels right here, but basically I was looking for a chop up and back into the recovery of that trend line, which is where we're at right now. We are recovering the trend line right around this 397. And this is where I think this rally in Tesla tops out. The theme behind this is that we're doing a back test right here. So you can see here, if I zoom in, here's my trend line, and you can see we're just barely chopping into it right around this 397. And usually, when you're gonna do a back test, you're not gonna just stop right on the trend line. They're gonna make it look like it's gonna recover the trend line, and then it'll fail. So that's how I'm playing that. I'm gonna go ahead and add a little bit to my position here. Now, if it does recover and actually just starts to break higher and can get a nice solid hourly close above here, then I'll just go ahead and close that position, and we'll just anticipate that as being a recovery of the trend line. But for now, I think it's going to be a kind of a false break higher, and then we're going to fail, and then that will have been a back test of this broken trend line. So that's how I'm going to play that one. Looking for more downside there, and I've got my purple targets down here. We've got a couple gaps here on Tesla. So I'm looking for some gap fills around 245, 225, and I'm reading this as a potential, back test with a whipsaw that making it look like they're going to recover, but they're not going to recover. That's how I'm going to trade this for right now. And take a quick look at the heat map here on the S&P 500. You can see pretty flat today in general. We've got some sectors that are up, some that are down. In general, across the board, S&P 500 looks flat, but you've got these two big juggernauts which are up, and that's what's dragging the market higher. So you can see here that basically if I go back, you can see the Qs is up 1.5%, or 1.22%. If we look at the equal weighted Qs, and I haven't even looked at this today, close that. That is down. So you can see tech is actually down, equal weighted. And when you have the market cap weighted like triple Qs, which is Apple and Microsoft, basically it's up 1.5%. And then the S&P 500 up 0.6%. The equal weighted S&P 500, which is up 0.3%. So in general, the S&P 500 is kind of flat, and tech is actually down besides Apple and Microsoft for the most part. So that's not a broad-based rally. We're just seeing kind of, basic, a little bit of, yesterday was a pretty big sell-off day. So to see a little bit of a recovery or flat bounce basically is not anything out of the normal. So I'm not really getting spooked out of this short trade. However, I do want to point out some things that maybe are happening. We did have this bearish falling wedge here, and we had this initial breakout and failure. This could have just been the back test of that breakout on the wedge, and now it wants to run up and actually make the measure target, which would be about 275. So that's completely possible. Again, we're bouncing off of, if you go to the weekly, we're bouncing off of this upper trend line right here. And you can see the week right here, we're just kind of bouncing off of that. So we could run up and tag 275 before rolling over. I don't think it's going to happen, but it is possible. So let's keep an eye on that. And obviously, we could even still do a back test. What I think is going to happen is I think we're going to fail right about here at this 267 level. I think we're going to get rejected here and roll over. That might not be today. Maybe today they just kind of hold it in this area. But I do think eventually we'll get rejected here. Could be wrong, but that's what I'm seeing as of right now. DraftKings here, just another trade idea. This one broke trend yesterday. There was a lot going on yesterday, so it was hard to catch all the ones that were breaking trend, but this one actually broke. So here's your uptrend line on DraftKings, and you can see clean break here. It's doing a back test, so this thing might want to do a full back test, maybe pop all the way up. To me, it looks like a good short on a full back test if you get it. And so that's how I'm looking at that one. And, you know, the measured target on this one is, this one you do have negative divergence here. I had to flip over to find it on the hourly. You can see here, the RSI and the PPO were making higher or lower highs as price. Right here was your negative divergence. You had a lower high there and price made a higher high. So that was negative divergent price action. And you can see that so far has been the high, kind of the high water mark. Now you have a break in trend. So everything's kind of set up bearish momentum indicators, bearish break in trend. So a back test seems like a pretty objective area to start a short position. Targets here, you know, obviously I think all the way down to the bottom of this trend line down here is probably the best target, around 28. And that would be a drop of, you know, from here would be a drop of 44%. So I think that's a potential target. Okay, next up, Philip Morris, not Pulte Homes. Oh, well, we can do Pulte Homes. I was going to say, we'll go to Philip Morris next. Pulte Homes, it also broke trend here. If I go to the daily, broke trend yesterday. Here's the daily. We have an uptrend right here. And you can see we broke trend right there. There's your breakdown. Doing a back test today. So obviously these things can just back test for a while and then fail. But when it's below trend, you really want to look to sell at resistance. That's typically how you want to treat it. Do we have negative divergence in this one? Not really, no. So maybe not the best short because you don't have the negative divergence, but it did break trend, so something to watch. You know, let's look at Philip Morris. I know I have this one marked out somewhere. There it is. All right, so I bought this one today. Here's what I like about it. Went long on this. Going to the daily. All right, this goes back. Your downtrend right here goes back to June of 2017. Lots of reactions. You can see resistance. See all the reactions that we have. There's another one right there. And then when you break above it right here, this period right here, we broke above that resistance, back tested it as support, back tested it again, then it failed. So that was a false breakout or a bull trap. And usually when you get a bull trap and you notice it's a bull trap, then you get the big impulsive sell-off. Same with a bear trap. When everyone notices they're in a bear trap, you get a big short squeeze. Well, same with the bull trap there. So sold off. But now we're back above it. And we broke back above it a while ago. It was running higher, but it was running higher, not super impulsively, so I was watching it, and then I noticed it was starting to sell off, and so what I was looking for was another back test of support, which it did today, this morning, around 75. You can see right there, if I go to the hourly, zooming in, there's your back test. See the wick ran down and tagged that support and held and running higher. So I didn't notice it I didn't get it at 75 because I didn't notice it, but I did get it up here about 75.80, and so far looking good. So we're going to continue to ride this one up as long as it remains above that support line. I'm going to hold it. Target, I like this 89.90 level. That's kind of some big resistance right up here. You can see lots of reactions up here, so I think a run up to tag that. Although, if we do hit it again, we'll probably break through it and potentially gap fill. So kind of two targets, about this 90 level and then about 100, 101. That's the trade idea on that one. Let's look at some financials here. All right, so financials have been very weak, and this is a pretty muted bounce. You can see it's up 0.5% today, but after such a big fall, to see a 0.5% gain, pretty muted bounce so far. So obviously it opened a lot lower, so we're getting a little bit of a bounce, but still below resistance, below all the resistance lines. So even we could back test this 2370 level and then continue lower. I don't see anything that tells me today is the bottom. Let's just put it that way. And it's the same with with tech. I don't see anything today that tells me that we're at the bottom of tech. Looking at volatility, you've got volatility falling. There's no spike in volatility. Yeah, we had this little spike right here, and then just this drawdown, and tech has been selling off recently, and volatility just is still pretty muted. So until I see a spike in volatility where everyone's rushing for put protection, which is what the VIX measures, when everyone rushes for put protection and is buying puts, oftentimes that's going to signal the bottom, because when everyone owns puts and the market's going down, they cover to they buy to cover to lock in profits. So when there's a huge short, when there's a big short position on, that will put a floor in the selling, because when markets go down, everyone buys to cover their short position. They buy the stock, covering their short, taking their profit, and the buying puts the floor in the selling. Here's XLV. This thing does, it hit the measured target actually, which is interesting. I didn't trade this one. I was too involved with several other trades, but here's the line that I had marked out for the measured target, and you can see we pretty much came right at that measured target. So that makes sense that we get a bounce right here. Maybe we bounce up. We could even back test the bear flag before rolling over. But the measured target came from the original flag right up here, or flagpole, which was the breakdown. Then you made the flag, and then you mark out the top of the flag at the breakdown point. So here's your breakdown point. So you measure the top of the flag at your breakdown point, and that gives you a measured target down to about 101, which is pretty much where we hit yesterday. So the measured target's been hit on XLV for this flag, which tells me, we get a little consolidation here. Ultimately, I think we're heading to 97 and possibly lower, but that's kind of how that one's playing out. Okay, Nvidia, I'm looking at a daily chart here, and I've seen this pattern before. This is the exact same pattern that I was talking about, I believe, on XLF. You have a bearish pattern here, a bearish rising wedge. We broke to the upside, but that was a false breakout, bull trap. Broke down, and then we broke the bottom of the wedge, did some back testing, and we've since failed, and now we're drifting sideways. Usually when you see this sideways drift on this bearish pattern, so we broke, we've broken the bearish pattern to the downside, so we're bearish. It's a bearish posture right now. We're drifting sideways. Usually what I have seen is you get a gap down, and I don't know, it's obviously not going to come today. Maybe it comes tomorrow, but you get this gap down and then selling resumes. So watch for that in Nvidia. It doesn't have to happen. Obviously, we could back test as well. I'm not in this one right now currently, so I'm looking for signs of continued selling. If we do the back test, I might I'll probably take a shot at it short on the back test, or if we get the gap down, that would be kind of your sell signal there. Okay, flipping over to the dollar. The dollar's important because the dollar is, you know, I saw the move up in stocks really due to the breakdown in the dollar. That was really key to stocks moving higher, was the dollar was losing value. And I do think the dollar is set up to continue to lose value, but again, it just moved really far really quickly, and I was looking for a back test. When you get a breakdown of major levels, here's the major level. Here's the weekly chart on the dollar. Big green line I have here going back to 2011. We've just been walking up that for years. And zooming in, you can see we broke right there. So basically, going back to the hourly, when you break a big level like that, you're not going to just usually just drift south and never come back to it. You're going to come back and do a back test. That almost always happens at some point in time. And so as we broke, then you can see, I mean, this pattern right here is really a kind of a rounding bottom pattern. If I can draw it out. Had to find my tool. But basically, it's basically this rounding bottom pattern right here. Sorry, my charts are a little whack right now, but rounding bottom here in the dollar. So the it's an accumulation phase. So where are we going? Well, logical point right now would be this 95.50, and we're almost there. I mean, we're halfway there. So we're going to get there in one shot? Nah, I doubt it. We'll probably come back down and do another back test of this 93.7, hit that, and then run up and tag it. But I still think at some point in time in the near future, we're going to be up at this 95.50. And then watch, if we break above that, which is possible, then this would be a big bear trap in the dollar. And a break above that, and if we start to break above this in the dollar, look for the dollar to move a lot higher, and that would be very bearish for the stock market. The dollar moving a lot higher would put a lot of downward pressure on the stock market. So that might mean the next large leg down in the stock market comes with a big, large move up in the dollar. What do I think is going to happen? Well, as of right now, because gold has been in a bull trend, and I'll cover that here in a second, I think the dollar is running up to 95.50 and then going to go lower from there. That's what I'm thinking is going to happen as of right now. But if there was a recovery, then I'll flip and I'll watch for that. Here's gold. Again, gold, drifting higher a little bit today, but ultimately gold's broken its pattern. So the pattern now, the trend, the near-term trend is to at least come down to this 1790. And again, I'm going to be buying down there. I'll be looking to buy some stuff down there and see what we get. Now, again, it all comes down to the dollar. So if the dollar can break that level at 95.60 and then move higher, then gold's going to move substantially lower. But as of right now, I see gold in a longer-term bull market. I'm going to buy at support anything that's in a bull market, and that's where I'm looking to be a buyer. Flipping back over to Tesla here, and then I'm going to wrap up. But you can see here's my level that I marked out on my trading platform at 397. We're struggling around this level. You can see it's kind of selling off. It's holding in there, but just kind of topping out. The momentum's not moving up. So could obviously continue. This is a 1-minute chart, but looks like it's going to start to top out. And the name of the game, the reason why, what I do is I basically have my charts. I use TradingView here. I mark my charts out, and I'm constantly flipping between my daily and hourly. And obviously I'll look at the weekly too, but I'm always looking at the hourly to give me an idea of, is something going to hold at resistance? And then I'll mark those levels out, those key resistance levels out on my hourly. I'll mark those out on my 1-minute chart on my trading platform. And then that's where I take my risk. That's where I take my trades, is up near key levels. What does that do? That keeps my risk very, very small. If I'm wrong and this pops above here, I'm wrong small because I took my entry, my position right at that key level. And so when I realize I'm wrong small. And if I'm right, then I can be right big. And that's really the name of the game. If you look at basically what we got going on here in the hourly, here's your tail. This hour candle is going to close here in about 7 minutes. And so far, just a whip, just kind of a pop above resistance, just like I was saying in the earlier video. I said I thought it was going to pop above resistance and then fail. So I took I took a short position right there at 397.50 or something. And if we get the close right below, then expect the next hour, maybe we pop above it again. But ultimately, I think this is going to hold as resistance. And I think we're going to start to roll over after maybe an hour or two. And that's how I'm trading that as of right now. So there's a quick lesson on how to kind of chart things and look at things. Thanks for subscribing. I appreciate that. Leave me a thumbs up, and I'll catch you guys on the next one. Bye.